Meanwhile, U.S. natural gas prices spiked as midday weather forecasts moved colder for much of the United States for the rest of this month. Nat gas inventories fell by 258 billion cubic feet. The EIA median analyst estimate was for 260 billion cubic feet. Well, sticking with natural gas, there has been some significant developments in the European natural gas market lately. Most dramatically, Ukraine refused to renew a long-standing agreement under which natural gas from Russia flowed through Ukraine to users elsewhere in Europe. The flow of gas is now halted, and that has posed big questions about European energy security and the role that liquefied natural gas from elsewhere in the world can play. Let's bring in an expert, Leslie Palti-Guzman, Head of Research and Market Intelligence at SynMax, for a discussion on all of this. Leslie, thanks a lot for joining us. Let's start with that decision by Ukraine to halt the flow of natural gas through the pipeline from Russia. It was not unexpected. And what I've read is that many countries were able to find other sources of gas. Is that your understanding as well?
Yes, I think Europe has been preparing for this day since Russia invaded Ukraine. Right now, when you look at the big picture of the gas imports into Europe, the largest supplier is Norway. The second supplier is the US. And we've seen that there has been huge handling of trade flows heading into Europe with a decrease of Russian supply into the European continent. The EU is still targeting to be completely independent from any Russian gas by 2027.
So Norway and the U.S. are the largest suppliers to Europe of natural gas. That's got to be liquefied natural gas in both cases, isn't it?
So Norway is pipeline gas and a little bit of LNG too, and the U.S. is only LNG.
And remind us how, over what period of time, the U.S. has built its capacity to become a global liquefied natural gas exporter.
So since 2016, the U.S. became an exporter of liquefied, well, I should rephrase, Alaska used to be the first U.S. Liquefied natural gas exporter, like a liquefaction facility. It terminated exports in the 2010s. And since then, 2016 was the big growth of U.S. shale gas to LNG production and exports, with the whole Gulf Coast building new facilities. Since 2016 up to today, so in about a decade now, the U.S. has become the world's largest LNG exporter, ahead of Qatar, ahead of Australia.
That brings us to this country. As you know, in Canada, we're only now getting close to the opening of a liquefied natural gas facility on the coast of British Columbia. Is there a market here for Canadian liquefied natural gas?
Absolutely. And, if you look at the global picture of who is exporting natural gas now and LNG, it's very welcome that Canada is entering the play. Because right now about 42% of the global LNG supply come from OECD country, and with the entry of Canada, this share will increase. So it's welcome for trade partners, especially the Asian trade partners that want to rely maybe less on Russia and on more reliable sources of LNG, and also diversify their trade routes. I think Canada has a great advantage in terms of what kind of diversification it's going to bring to the different kind of importers around the world.
There are also relatively recent sanctions, I believe, from the U.S. OFAC. That's, I believe, the U.S. Office of Foreign Asset Control on Russian LNG, correct?
Yes, that's a big deal. This is the latest sanctions from the Biden administration before the new administration takes office. They have been targeting about 183 commodity tankers. Most of them are oil tankers from the shadow fleet. So it will heavily impact the revenues that Putin is using for its war's coffers. So here the main goal is to impact the war chest from the Kremlin. It's also targeting for the first time two small liquefaction plants in the Baltic. So the sanctions had only targeted on the LNG side a new project, the Arctic 2 project, that stayed away from operational projects. That's the first time that we see sanctions targeting existing trade flows. However, those are very small projects, so I don't think it will impact much the European energy security. I'm still watching what will be the impact post-winter when Europe will need to refill its storage. But again, the context is very different than a pre-Ukraine war. Europe can rely on a well-supplied global gas market as of 2025, actually, because we have new suppliers coming into the market. You mentioned Canada earlier. Canada is one of the countries that will bring additional supply to this pool mid-2025.
Let's switch to the Panama Canal, because I know you've got some interesting thoughts there as well. Donald Trump, of course, has asserted that the Panama Canal should be returned to the United States in terms of ownership and control. But what's he really trying to accomplish there? And I think you've said in some recent commentary that what he's really trying to accomplish is to accelerate an improvement program at the Panama Canal that will allow it to be a more effective conduit for trade, including U.S. liquefied natural gas, correct?
Yes, so beyond the rhetoric, I think the aim is to restore Panama as a reliable and competitive transit route. We've seen in 2024 a sea change in trade routes. There were two major canals that were almost off reach for many commodity tankers. One is the Panama Canal because of drought. And second is the Suez Canal because of the war, and the Houthi, backed by Iran, basically targeted tankers in the Red Sea. So trade routes have really been a big deal in terms of how it impacted the rerouting of commodity tankers. And here what we see is that specifically US commodities had to reroute around the Cape of Good Hope, adding costs to shipping and also environmental costs because you're using a longer route. Your fleet is utilized for longer. So if you compare the route from the US Gulf Coast to Asian markets using the Panama Canal versus Cape of Good Hope, you're easily adding 20 days to your journey. And at SynMax, with our platform, Leviathan, we've seen that in 2024, 96% of US LNG destined to Asia used the Cape of Good Hope.